When you've just been shaken up with the largest single-day meltdown in the stock market, you need to ask that question. What can give my portfolio a shelter from the market storm? Is it real estate? Can investments in property cushion the stock market blow? Well, on this very timely debate, let me welcome the panelists, Kuldeep Chawla, Managing Partner, Commercial Real Estate, Milestone Capital Advisors, Amrish Baliga, Market Expert, Gulam Zia, Executive Director, Knight Frank India, Harshroongta, SEBI-registered investment advisor and founder, Harshroongta.com. Rohit Raj Modi, Vice President, Credine, Director, Ashiana Homes. Sameer Jasuja, founder and MD of Prop Equity. Now, if I just look at what's happened, gentlemen, over the last 3 years, stock markets in India have had a strong bull run, with the Nifty CNX clocking a return of 13.5%. At one point of time, the returns had actually crossed 20%. These 3 years have, however, been very dull for the real estate market on the other side. I think the last 12 months have been perhaps the worst that we've seen in a decade. Sales have dropped and prices have, of course, either stayed flat or even fallen in some of the markets. Now, most analysts have said that markets won't give more than 15% at the beginning of the year. But if I take 2nd January Nifty levels of 8395, Nifty is actually down with this latest bloodbath. So, what are we talking about? We're now coming to revisit, is there a connection between real estate and stocks, and should you be looking at real estate a lot more closely today, knowing that the volatility in the stock market can attack you? So let me first begin with Amrish Baliga. I think you've got a perspective on both sides, Amrish. There's real estate, which has been really dull. Somehow it didn't even do well when the markets were doing well. But now, do you need a fresh perspective?
Absolutely. I mean, if you look at the way real estate moves, normally it moves post the market move. Even the last move which we saw, once the market started moving from 2003 to 2004 onwards, you had the real estate following that. So I think even this time, in case we see the markets continue to move up, and again, I think most of us are talking of a long-term bull market because of the Modi government. So in case we see a decent bull market for the next 2 years, I think the real estate also can recover and start moving post that.
All right. So Amrish, what do you make then of the market meltdown? I mean, do you think that we are in a bull run and this is just a small global shock which was waiting to happen, and we will go back on a track of another bull run?
Absolutely. Unless, of course, the Modi government gets it all wrong, I don't think this is the end of the sort of intermediate bull run which we saw. This is only a correction, which was, I think, overdue. A lot of us were talking of a correction. So I think this has happened because of the international scenario. And I think the pain would be there for a while. But then clearly we are on track. And I think we should see a decent bull run over the next couple of years.
All right. Okay, Kuldeep, what are your views? I mean, Amrish is actually not even talking of this week's major bloodbath that we saw. And he's saying, look, we're in a bull run. And it's generally real estate markets which follow the rise in a stock market. Don't you think the last 3 years' rise were good enough to have spilled over to real estate?
So I think there are two parts to this, Manisha. Part one is that it's not always a question of one or the other. It's a question of how much of one versus how much of the other.
Absolutely.
That's point one.
Yeah.
Point two is that, real estate is a slightly more complex. Second point is that, real estate is a slightly more complex asset class, in that it depends on A, are you doing real estate IPOs? B, are you doing real estate equity? Are you doing real estate debt? Are you doing it directly, or are you doing it through a platform?
All right.
Because real estate generally involves more active involvement.
This is for buying a property. Let's narrow down for the end consumer who says, hey, I have money, I can put into the stock markets, I can put it into an FD, I can buy some gold. How do I divide my portfolio? How do I balance it out, and how do I use the opportunities that the different markets throw to me? So let's leave out everybody else. Buying a property is, let's focus on that.
If you look at, yeah, sure. If you're buying a property, then clearly, with the long-term leverage that is available, the opportunity that is there and will be there for the next 6 months, maybe a year, maybe a bit longer, I think the bull run in equities will spill over. I think selectively in certain micro markets, we're already beginning to see that. You won't see that in luxury, but you're definitely seeing that in value for money units. Number one. Number two, you're seeing that both across residential as well as to the extent that retail is able to participate very, very selectively at the upper end on rent yielding assets.
Okay, so you're saying it's already beginning to happen. Sameer, can you see it? Because the data that we see, other than let's say some markets of Hyderabad and a few pockets in Pune which are holding steady, aren't we feeling the pressure that real estate markets have really touched probably rock bottom of a decade?
Absolutely, Manisha. I don't see any signs of any appreciation that has happened over the last 1.5, 2 years, except give or take some very, very few super luxury assets, in fact, and not the other way around. My view is that real estate from a retail perspective has to be looked at from 2 points of view, A, as an end user, or B, as an investor. If you're an end user, this is probably the right time to buy, and you should not be looking at it as an asset class. It's a home that you need to stay into. If you're looking it as from an investment point of view, multiple things come into place over there. First of all, real estate assets are much more safer assets. They're simpler to understand. They have a rental yield possibility, and there is an underlying asset beneath them that you can touch and feel, and you don't have to follow it, or you don't really need to understand the market that much as you need to understand stock markets or other markets, because they're really affected by the global scenarios. That's one. B is that yes, current markets where you stand today, there is a very good opportunity for investors to come and buy long term. Whenever you look at real estate assets, A, they are cyclical ups and downs, unlike stock markets to that effect. B, that they're illiquid, so you have to have the patience and the capability to hold on for a much longer time should you go into the wrong side of the cycle.
Okay, fair enough. So you need to have both, is what I'm hearing, to cushion one
Manisha,
from the other.
Sameer is saying exactly the same thing which I'm saying.
Absolutely.
So Manisha, Sameer is saying, exactly what I'm saying, which is that at the end of the day, although the prices aren't moving because you're not seeing huge volume of retail, but the smart retail investors, whether in certain micro markets, are already beginning to pick up from an investment point of view as well as from an end user point of view. If you focus on the investment point of view, at the end of the day, if you were to consider the fact that A, you can get leverage against retail buying,
right.
B, that prices are at a low, and C, that the economy itself is showing signs of strength, then over the next few months you will have some of the best pickings that are there in real estate.
Okay, fair enough. Let me toss to Ghulam Zia. Ghulam, of course, being part of the industry, real estate, I know there are more voices saying that, look, it is an asset that if you buy, it's a hard asset. You get, the shocks of single day meltdowns are less, so psychologically it's a more comforting asset. But historically, if I look at it, any which way, stock markets have always outperformed real estate in any market globally, isn't it? Yet high HNIs and well-off investors also look at real estate in their portfolio.
Well, first of all, I don't believe that you should invest in real estate unless the value of your asset is doubling up every 5 years. And if it is not happening, then whatever returns you're getting are not really worth the money that you have put in this asset class. And also considering the risks that you're taking up if you have put it up for rental usage, or if you're putting up for, or just taking care of your properties, etc. Lots of headaches vis-a-vis the stock markets that you speak about. I may not have complete data to compare the performances of stock performance as equity performance vis-a-vis real estate performance. There are believers who want to, at least those who are sitting in Bombay who have seen some crazy bull run in Mumbai real estate, have always believed that real estate in Mumbai performs better.